Good morning everyone, this is Peter Iosef, Senior Analyst at IronFX, bringing you a small heads up for the release of the US Employment Report of September, tomorrow Friday, the 5th of October at 12:30 GMT time, and is expected to rattle the markets. Three indicators are standing out, with the star of the report being the non-farm payrolls figure, which is expected to drop to 185k if compared to previous month's reading of 201k. The second indicator would be the unemployment rate, which is forecasted to tick down to 3.8% if compared to prior reading of 3.9%. And last but not least, the average earnings growth rate, which is expected to slow down to plus 2.8% year on year if compared to previous reading of plus 2.9% year on year. Should the actual figures and rates meet their respective forecasts at first glance, the readings seem to be set to weaken the US dollar, with the exception of the unemployment rate. On the other hand, we share the view that indicators continue to show a rather tight labor market despite the drops, as both the forecasted NFP figure and the average earnings growth rate remain in rather tolerable to high levels for the US economy, while at the same time the unemployment rate's tick down supports the notion of a tight labor market. Please be advised that Fed Chairman Powell's hawkish comments yesterday may have raised the stakes for the release of the employment report tomorrow. Powell said that the Fed may rise interest rates above an estimated neutral setting as the remarkably positive US economy continues to grow. Given also the Fed's dual mandate for inflation and unemployment, expectations may be running high for tomorrow's release in the market. Should the actual rates and figures be perceived as an indication of a slack in the US labor market, we could see the USD weakening, while on the other hand, should the data imply a tight labor market, we could see the US dollar strengthening. Also, be advised that there could be an asymmetrical downward response for the US dollar should the actual data tomorrow have a negative surprise in store for the markets. In every case, increased volatility is expected at the time of the release for USD pairs across the board. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, subscribe our YouTube channel, or circle us on Google+. This is Peter Iosef from IronFX wishing you solid trading.